Good afternoon, good morning, and good evening to all of our crypto fans. You have your crypto religious leaders, Robert, Carlos, and Matt, ready to take you to the promised land today with a little bit of an update on the crypto markets. A lot of things going on today. A lot of push and pull from regulatory perspectives and with SEC fights. A lot of things we can dig into. When Carlos and Matt and I were doing the show notes, we thought maybe it would be interesting to put all of that into the framework of a bull and bear case for the crypto markets. There's a lot of different things that are happening around, so structuring that format might be a little bit of an interesting way for us to focus on things. But before we get into all of that, most important questions of the day, gentlemen, what are we drinking?
Unfortunately, I'm drinking water, but that's because I have to drive at like midnight, so I'm going to be driving back to New York, which is like a 17-hour at least on the road. So I can't get drunk, I'm afraid.
You can tell that Matt is very conscious of risk management, as he should be in this type of role, like making sure no beverages, 7 hours before he drives.
It's more of an all or nothing kind of approach. Like, what's the point just having one?
I love it. I'm actually bringing back the oldie but goodie. It's time for a little Patriot water in my life. I was a little saddened because Bud Light actually, if you saw the news, became the number 2 selling beer in America to Modelo. In my heart just sort of, like, listen, no hate towards Modelo. It's a fantastic beer. It's a fine beer. But, we're talking about Bud Light here, man. Come on, guys.
I saw that news. I felt like it was a call to action. Like, all right, guys.
Exactly.
We're obviously not drinking enough.
Just before Independence. Come on, July 4.
I loaded up the kids in the minivan, and I'm like, fuck it, kids. We're going to Costco.
God, this is my patriotic duty. We cannot let this happen.
Yeah, we can.
First our southern borders, now our beer. Like, this is crazy. We can't let this happen.
Yeah, not going to happen in the Zendejas household.
Logos advertised.
So,
anyway, of water. Yeah, Matt, have you ever tried Liquid Death? When you're drinking water, have you seen it before? It's they've been raising tons of money. It's water that looks like it's in a beer can, basically, and it's been killing it lately. So maybe we can get you a case of that.
Does it taste different, or is it just?
No,
with a name like Liquid Death, I expect something, pretty.
Speaking of marketing, we're talking about a $1 billion company based purely off the premise of normal ass water in a can that looks like beer.
Yeah,
nice.
It's amazing. That also is America. I mean, that really is. It's amazing.
I was watching like this interview with a founder of Spanx on CNBC. And she was talking about how when she first had her idea for her business, like, a lot of people were rejecting her and telling her it was stupid. And she's like, I had a mentor once tell me, I have 4 words to prove to you that there's no such thing as a bad business idea. And those are teenage, mutant, ninja, turtles. So
you never know, right? It's like what enters is the social zeitgeist.
Exactly.
Yeah.
Someone rolls in, it's like, listen, guys, I'm gonna need $100 million at $1 billion valuation for what? Water in a can that looks like beer.
You know what's funny though is, like, once that happened, I was like, why didn't I think of it? It's kind of true, because you don't want to look like a bottle of water. You want to kind of look cool, right? So you want to blend it a little bit. Social pressures, right?
Yeah, you don't want to be the nerd at the bar who's drinking drinking water. So you pay $6
okay, Matt,
for a can of Liquid Death.
So funny. Speaking of zeitgeist, interesting news on the ETF front. I know we were talking a little bit about BlackRock and then coming in. There's been a lot of institutional news out there across, whether it's ETFs, some news from large institutional players entering in, maybe some like acquisition rumors. Also, like a pretty large institutionally backed crypto exchange also started getting up and running. We saw some news come out from the Wall Street Journal on that too. It's just kind of interesting to see when it rains, it pours, I guess, guys, huh? When you start seeing a lot of these guys come out.
They're like 4%, 10%, pretty significant rallies over the last few days.
Yeah. I mean, it's sort of crazy. I mean, let's actually jump into like the format of sort of bull case and bear case, and I'm gonna kind of like start with pre Blackrock ETF. What were the condition was the setup for the trade, right? And if you think about it, the big narrative was really, we had the U.S. clear its debt ceiling. People were quite bullish on risk assets in general. And suddenly we get lawsuits against Binance and Coinbase from the SEC, with the threat of further lawsuits coming down for basically anything that has ever touched crypto in the history of the world, within the context of being a U.S. person. And mood was pretty dire. So if you think about it, like, there was already a gap, meaning like, if you think about like prices of Ethereum or Bitcoin, we were kind of ranging in this 28K for Bitcoin, 19K for Ethereum, and then we fell down pretty precipitously into the 24.5K range. Fun story: we were exactly support in the market at 24.5K. We had a massive limit order in to buy some Bitcoin there, and the price got to 24.5K but did not hit. I was very pissed. Anyway, it got down super low, and Ethereum was trading somewhere in the 1600s, which it hadn't done in several months. And the big driver of that really was uncertainty about what the future of crypto was in the United States. Two biggest exchanges had pending lawsuits. In those lawsuits, we were pretty much uncertain about what the state of, any crypto asset outside of Bitcoin was, from the perspective of being a security versus a commodity. And that's sort of like the picture that was painted. And then you come up with the next bit, which is BlackRock kind of turned the tide. And so obviously the first bit of good news that really hit the tape was, ETF filings. And as of, today, we've got filings from BlackRock, Wisdom Tree, Invesco. There's rumors of Fidelity either filing their own and or buying Grayscales. Bitwise and Valkyrie will file as well. And I'm going to give Valkyrie the award for the best proposed ticker, which is BRRR. Just fucking brilliant. We also had Deutsche Bank announce a custody offering, and we had a crypto exchange called EDX, which is backed by Citadel, Charles Schwab, and Fidelity hit the tape. And weirdly enough, and this one I just don't fully fucking understand, the SEC approved today a leveraged BTC ETF. So they'll give you, I'm not fucking joking, like they will give you, they'll approve a levered futures asset, but not a spot asset. It's so stupid. And by the way, I stand by my statement that Bitcoin is a fucking like 80 vol asset. Anybody who trades an 80 vol asset with leverage is a complete and total degenerate.
Yeah, you're asking for trouble.
Shouldn't be allowed to keep their money when they lose it.
Yeah, it's like going to go to the casino, right?
Yeah.
I was going to say one of the big things for me this week, initially anyway, when I heard the DB custody news. So I think they filed for what's it called? Digital asset custody license from BaFin.
Yeah.
That's when I heard that, I was like, oh, cool. And it's a corporate bank. So that means, the utility thing that we've been talking about, maybe they'll help facilitate that. Because, ultimately, and we talked about this, I think, in the first podcast, if you could take a Bitcoin and go buy a car, that's real utility. If Ford then need financial services to transact that, and it doesn't have to be legal tender, but as long as they can convert that Bitcoin into whatever they do to need to pay staff and taxes, then great. That's utility. That's kind of what we want for this thing to really function as a asset class that we can use outside of just speculating on prices effectively. So when I first heard that, I was like, oh, this is great because they are a big corporate bank. They have many, many big institutional clients. Maybe the clients are asking for it, and that's actually what this is for. I actually did some digging into it. So I think what the offering is very similar to what a Fireblocks or a Copper type platform is. So it really will be purely custody. So the idea for their business model is custody fees to start with. But they're planning to then offer like tokenization and like trading fee generation down the road. So that to me then is pretty interesting as well, because you can then take, you could have a client that wants to do corporate bonds and you could say, hey, we'll tokenize that for you as well. So there's some pretty interesting things there. Even if it's not direct utility, it's giving a better use case for the tokenization of assets as well, which I think is pretty. Now there will be securities, so let's be clear on that they will have to be registered and everything, but it's kind of like what happens to happen anyway. And
BlackRock actually came out with a very similar stance. I saw an article that basically said that they're very bullish on the future of tokenization of assets, which to me is way more exciting than an ETF. But agree with you.
Yeah, it's going to be a way bigger market too.
Yeah, I was a bit worried I haven't actually seen what their offering is, but I was worried they're trying to like build their own like blockchain tech stack and everything, whereas they should just use stuff that's there. You don't really need to recreate them. But we'll see. I mean, for me, that when I first heard it in my head, it was a bit bigger than I then kind of realized it to be. But still, tokenization and everything is pretty awesome. And having someone, a big bank get on board with that and register shows interest in the sector.
And I think if we go the route of not financial advice, not legal advice, for educational purposes only, alpha alert. I actually think that for that reason alone, I think we should get like one of those like radio buzzers. Like
I'm gonna get a bullhorn. I'm gonna get a bullhorn.
No, but I think ETH is massively underpriced here relative to Bitcoin. You saw that like people ran to the first order effect, which is, oh shit, there's a BTC, ETF that's getting passed or that's getting filed for. Let's front run the institutions. Let's buy some, Bitcoin. So, Bitcoin rallies like 10% to Ethereum's 5%, which is great. But hear me out here. What is the likelihood that BlackRock or any other one of these institutions is going to get a Bitcoin ETF approved and then be like, let's just stop there? Like 0% probability they do that. There's conversely 100% probability they're going to at least file an ETF immediately thereafter. And I think that that's a huge opportunity. And then secondly, if you have guys like Deutsche Bank and BlackRock offering custody and tokenization of assets, so a case in point, think of this. Just Deutsche Bank is actually, Deutsche Bank and BNY Mellon are the largest issuers of depository receipts. All right. And what are depository receipts? It's really just if you want to buy Nestle in the United States, Deutsche Bank will buy the asset in Switzerland, right? They'll custody it in their Swiss arm, and they'll issue through their American entity a depository receipt that basically says you own that asset, and they'll list it on an exchange. Right? What's stopping them from doing the exact same thing and tokenizing it? I know from firsthand experience because we went through the process of trying to get a FX hedged depository receipt approved through the SEC. But like the depository receipt business is fucking massive, and banks make a ton of money off of it in fees. Imagine if they could do this with pretty much any asset in the form of an Ethereum security. Like the demand for ETH and ETH block space is just going to go up through the roof. I can't think of a different asset that they would do it on, for these large types of financial transactions.
Yeah.
So, with this sort of news, I'm very bullish ETH. I also love Bitcoin. I'm not like a full ETH maxi, but that being said, I think there's a lot of opportunity when you hit like the institutionalization of crypto in both an approval of an ETH ETF and also the same players moving into tokenization.
Yeah, and it's like massive for the settlement risk issue as well. I mean, we were talking about that earlier this week, Carlos, but it's also a nice segue into EDX, right? Like that kind of is trying to solve the counterparty risk issue that we've experienced with FTX and the likes, where, I think for institutions to adopt, they basically want to see real adults in the room now, not just unicorn funds.
A teenager being like, "Yeah, I figured this out, guys."
Yeah. So I think, there's a lot of interesting stuff there, and like we talked about BlackRock, but Fidelity also own that, and they also may issue an ETF. So now they'd have their foot. Well, I think they were a founder, right? So I think they'll have their foot in the exchange and in the ETF issuance space, which is.
And just for the broader audience, so what Matt was referring to is EDX is a cryptocurrency exchange, and what makes it a little bit different is that they are not they are not holding custody of your assets. They are purely an exchange, unlike other exchanges like Coinbase, which you'll have to deposit your capital with the exchange. They are banking on leveraging traditional broker dealers like Fidelity, what Matt mentioned, and Schwab, and they've also partnered with Citadel Securities, a very large market maker, to help make that happen. So it's a little bit different in that regards, and obviously a lot of very large institutional players. To your point about Carlos, just seeing the relative value gap widen so much between BTC and ETH, given all of this recent news. There was something telling too within the EDX press release, is that they're only trading something like 4 or 5 tokens to start. It's Bitcoin, Bitcoin Cash, Litecoin, Doge. No, I'm kidding. And Ethereum. it's all the pure institutional ones. No,
and Pepe.
But they're focusing purely on these like Bitcoin Cash, and Ethereum, right? Ethereum, and it's just interesting to see you have like these large. They're only focused on such these narrow remit, and they're doing that because there's been a lot more guidance as to how these assets will be defined. So I think that's even more evidence that there could be a relative value gap in that between BTC and ETH.
I think that what people really need to understand is that in the institutional bull run of late 2023 and early 2024, it's going to be almost exclusively limited to Bitcoin, Ethereum, and other like top tier assets that are not, at risk of being unlicensed securities. Just purely for the sake of these guys aren't going to fuck around with like legal or reputational risk.
Yeah.
So, if you're buying alts off of this news, if you made any money, for the love of God, take profit.
Say that any time you have an alt that makes like 20-30%, just take profit.
Yeah, for the love of God, do your family a favor, just fucking like take some money off the table. I mean, seriously. Yeah. But I guess kind of moving on, because there's a number of things, right? Like that was the first shell that hit, but we actually have behind the scenes, and I think this is actually more interesting because if you take away the ETF, I actually think there's a number of things that are happening in the market that in and of itself should restore faith and probably would have brought us back to parity from where we were pre-SEC lawsuits anyway, just because I think the momentum is very clearly on the side of crypto. So I kind of want to just discuss the legislative clarity. There's 2 bills that got introduced.
Mm-hmm.
We talked about the McHenry bill last week, but I guess the update to this is that the McHenry bill is actually now going to get a vote in the House in July. and the House is predominantly Republican, and being pro, crypto is an issue that I think the Republicans are going to want to, claim stake on for the 2024 elections. So everything that I've heard basically says that this bill is going to get voted on in July. And as it currently stands, it's looking like it's a very reasonable delta that it passes. It will likely hit trouble when it hits the Senate, because you're going to have to go through the Senate Financial Committee, which is chaired by our favorite person, Elizabeth Warren. But that being said, I think that's actually pretty solid news that we'll actually see a bill hit the House of Representatives, and with a fairly decent chance of getting passed in July, which is a lot sooner than I thought we'd get anything approaching regulatory clarity from the House. So I think that's a massive good news. The other one that hit, which I think is probably a lower delta, it's probably more a little political gamesmanship, but it's actually quite interesting. Right now you have the structure of the SEC is Gensler at the top, and then there's 5 directors, and then those directors are basically 3 by the sitting party and 2 of the minority party. Mm-hmm. And Representatives Emmer and Davidson, who are both Republicans, put out a bill effectively to fire Gensler. But what they would do is basically create 6 directors to make sure that there's equal Democrat and Republican appointees at all times, regardless of who has a majority in the House. And then get rid of the chairperson and have those 6 directors basically report directly into Congress. The idea being that you remove a lot of the political bias in the SEC and allow it to primarily focus on rulemaking for the sake of carrying out its goal of capital formation and investor protection, which I think is pretty reasonable. I'm not very bullish that that's actually going to happen, but I think it's at a minimum it's indication that this is actually becoming a reasonable issue in Washington. I think the other thing that people don't fully understand as well is that crypto people hate Gary Gensler because he is doing regulation by enforcement that's just been very anti-crypto incumbents. But a lot of TradFi people don't like him as well. And one of the main reasons why is because they've put in a lot of rule changes recently that change market structure in U.S. equities. And anytime you do that, there are literally billions of dollars at stake by messing with things like tick sizes and payment for order flow, which allow some of the big high frequency trading houses to generate literally billions in profit. And even if you only look at Citadel only, like Ken Griffin donated something along the lines of $100+ million. You got to imagine that gets him a little bit of visibility to voice his displeasure at people like Gary Gensler. So there's a bit of headway going there. You can look at that as a probably a net positive for crypto, but generally speaking, those are kind of the 2 big legislative pieces that have popped through in terms of getting better legislative clarity.
Yeah, one thing that I've realized after researching, getting more familiar with legislation, I've never followed legislation about anything like I followed it about crypto as closely.
Yeah.
And one thing that I've noticed also with someone like Gary Gensler, what he'll tend to do often, and this is a key political act, is go through with some outrageous legislation. The goal is not to get that passed because he knows it won't, but the idea would be to relinquish a good portion of that and keep what he is actually wanting, which might be 25% or 30% of that legislation. And it's just interesting to see how, and this is not just a Gary thing, I think this is a broader politician thing. So the fact that you're seeing a lot of these legislations come out against Gary Gensler is just showing that there is that, to your point, this negative front that's growing for trying to get him removed or at least reduce his political influence.
Have you heard of the term getting ratioed?
I have not.
I feel like I'm learning all these Gen Z terms about social media, but there's a thing called getting ratioed, which basically means that in social media, if the ratio of your likes to comments telling you you're a piece of shit is really bad, that's what's getting called ratioed. And Gary Gensler is the king of getting ratioed. Now, the issue with that, though, and this is one of the things that I follow a lot of people on the Twitters and the YouTubes that keep track of like politics, is that Biden is not looking so great, even within his own party, but certainly across like the broader election. And
what is he also getting ratioed? Is this like an actual metric we can use to value Twitter posts? I like it.
We probably should. But either way, because there's growing displeasure amongst the populace for people like Elizabeth Warren and Gary Gensler, and Janet Yellen for that matter, those people, even if Biden wins the election in 2024, there's rumors that he would be looking to shake up key political appointees to sort of like, look like he's the guy in charge and that sort of stuff. And so the scuttlebutt around DC is that Yellen and Gensler are on the chopping block, even if we get, a Republican or a Democrat retention of the White House. So that I think is actually probably reasonable. Now, who knows who they'll replace him with? I mean, we can't be guaranteed of anything. But that being said, it looks like they've fallen out of favor. And with people like Larry Fink from Blackrock, who's a massive Democrat donor, trying to get a Blackrock ETF approved. At a minimum, I think we're going to get slightly friendlier legislation around Bitcoin,
which is very nice. And on top of that, Fed comments, I thought it was kind of interesting. We saw J Pow confirm that Bitcoin has staying power. Was it Bitcoin or crypto in general has staying power?
He said crypto in general has staying power, yeah.
That was
very, very begrudgingly, because I actually watched it. He's like, well, it looks like it's here to stay. I don't fucking like it, but it looks like it's here to stay. But then the headline was like, Powell says crypto is here to stay. I was like, guys, what planet are you from? Either way, the point, the fact that he was sort of like put into submission to like admit that it was, it was here to stay, I thought was pretty cool.
Yeah.
But to me, actually, I think that the other thing from that hearing that was more appropriate in terms of being bullish was two things. The first is he did say that they viewed stablecoins like USDC as a valid form of money, which isn't quite a ringing endorsement, but one that indicates that they're not going to go after it.
But you should hope so. If it's backed by US government issued debt, like they can't really go after it.
Yeah. Well, I think the thing that they don't like about it, which is like a dirty thing that most people don't really get, is the fact that it's 100% backed by deposits. Like it sort of ruins the velocity of money because
it's inefficient.
You can't lend off of it.
Yeah, but that's why actually one of the proposals for CBDC was not to do it like stable coins how they are now, as you said, because it locks up the cash and that's it. Like there's nothing you can do with it, but to tokenize deposits effectively.
Yeah.
But anyway, sorry, it's a separate topic.
No. But like that goes into the next thing though, which is sort of the other thing that he talked about was that he didn't think FedNOW would be effectively like a CBDC available to retail people, and I think that was a big concern by the crypto community. Is that we'd get rid of crypto and we'd try and replace it with this government surveillance tool and a CBDC, which I don't think is the case. I don't think that was ever the case or super feasible. I think the more likely case is that you use something like FedNow or US GovCoin or whatever you do basically as a way to make the actual money transfers amongst Fed participant banks easy and make that be basically like instant settlement between the Fed and member banks that, access the liquidity windows that are provided there, which I think is actually pretty interesting and cool.
Yeah, I believe FedNow is going to do that anyway. So it should be instant settlement for interbank. And I think then if your bank's part of it, you may be able to transact faster. But it's not, like you said, it's not open to the public.
And that's the thing. So we're talking about obviously bull and bear cases. And one of the things I see with asset tokenization, comments around the Fed was, are we going to have a permissioned blockchain, permission versus public blockchains, right? And we can have a lot of these tokenizations all put together through blockchain, but what are the odds that these things are put together, but they're put together through permission blockchains, where you still have to get like a license from the government, and you have to operate in this like closed ecosystem, which might detract from some of these other more public blockchains. Now, from what I've read, I haven't really seen much being done on the permission blockchain side that's really meaningful or actionable. It's not to say that something might happen over the next 5 to 10 years, but just kind of curious if you guys had any, even if it's philosophical thoughts about how with the as a possible bear case to public blockchains, the rise of permission blockchains with.
No, I don't think that that's going to really have that big of an impact, to be fair. I think that like all of the moves in terms of the regulatory, proposals that we're seeing, and even J Pow's most recent comments kind of lead us to the conclusion that the end state really is going to be that the core infra will likely end up being, interbank permissioned, whether it be through some FedNOW infrastructure, which I really don't care about, to be quite frank. But it could also end up being like, KYC'd and, identity infused Ethereum L2, right? Which I actually think would be really cool, and probably serve like a really valid point within sort of the infrastructure. And then as it relates to retail, I think the right answer will always be to allow financial intermediaries to offer things like stablecoins themselves. So like, for example, USDC, whereas like USDC is going to have deposits that they hold at banks, which is the right thing for it to do. And those banks are going to consume, participate in FedNow and whatever else they need to, and that's the right thing. But then they're going to offer, as an intermediary, things like USDC to customers. And, Matt and I actually just went through a process of setting up a Circle account. I can tell you they have very good AML and KYC, which basically means that, if you want to convert your USDC into USD, if you want to actually do anything in the real world with it, then you're going to have to go through KYC and AML, which is also the right thing to do. So I think if you have sensible policy around policing the like financial on and off ramps, right, and then you make sure that the financial institutions, which provide sort of the infra for any retail solution, participates in either KYC layer 2s or private blockchains like FedNow. That's all well and good. I think that's like there's a place for a broad spectrum of technological solutions to handle very specific problems, but at the end of the day, I think that we're kind of converging to the point where like retail is going to almost always exist, or any meaningful application is going to exist on a public blockchain, with legislation in place to basically govern the way that blockchain has infrastructure layers provided to it and the on and off ramps for retail.
Yeah, I mean, interesting. Yeah, because I mean, I would love to do a little bit more research, to be honest, on the private blockchain space, just to see how that would. Because for example, we've seen some. I think it was Securitize. There was a recent startup that was trying to tokenize private funds. They, interesting enough, they are also doing it on a public chain. I think they're doing it through Cosmos or one of those other chains.
And Avalanche.
Avalanche was it? Yeah. So I mean, just like it's just interesting.
Well, it could be a few.
Yeah, it could be a few, and who knows? Like they might just be starting with one, and they might migrate just to try to get up and ramped. But it's super important to be able to keep those minimums, right? The visibility of those underlying tokens is super crucial for retail. Interesting.
Yeah.
Cool.
And I think if we now take a step back and think like, what's the final bit for the bull case for crypto? And that is basically like what happens with the actual cases that the SEC put out there that tanked the market in the first place, right? And we've actually seen some really positive news this week from the perspective of, those crypto incumbents that actually, to be fair, makes the SEC not look very good. So first and foremost, the case where the SEC was trying to seize assets for Binance US, that actually did not go super well for the SEC. The main thing was that in the court case itself, and this was something that was leaked by CZ and personally, they effectively found that the SEC actually had no evidence of commingling of assets by Binance. And the judge called them out on it and basically said, I'm not going to give you guys the ability to seize assets here because it doesn't appear as if you have any evidence backing the claims that you made. Which, if true, is pretty shitty and makes the SEC look absolutely terrible.
It's mind-boggling. When I read that, I was floored. I was like, what sloppy... What slop is the it's wow, it really tarnished the reputation of the SEC. I was shocked.
Yeah, I mean, and like I said, I welcome regulation, and I stand firmly in the court where we need to give government its due respect, and we need to make sure that we venerate the institutions themselves. The execution of the people put in charge of that, I think, as citizens, we have the full right to criticize. And in this case, I think the execution, if true, was quite sloppy.
Mm-hmm.
The other case that came out as a pretty large victory is Paul Grewal, who's the general counsel for Coinbase, posted that the U.S. Third District, which is Delaware, New Jersey, those district courts are basically like the level below the Supreme Court, retained jurisdiction on the SEC versus Coinbase case. On Coinbase versus the SEC, where Coinbase sued the SEC in what's called a mandamus letter to give it regulatory clarity that it's been asking for. The SEC basically came back on the original request and said, we don't feel like we are obligated to give you this. And the court said, no, you are. And they gave the SEC a deadline to provide in writing
what was it, 100 days or something?
By October. Yeah, they gave them 120 days. So by October of this year, if the SEC has not complied with that, then effectively they'll throw out that lawsuit. And this basically gives the SEC, whose sole contention in both the Binance or the Coinbase and the Binance case was effectively that you guys are, dealing in unlicensed securities. And so without any actual regulatory clarity there, it's looking like there's a very good possibility that those cases might get thrown out. So super positive news. And I think that is actually quite bullish if you're actually following the legal case. I think that also kind of falls under the perspective, though, of, the initial headline hits really hard, and then the retraction gets buried in like page 12 of the newspaper and no one pays attention to it.
Yeah.
So
and that's kind of what I was mentioning before about, I think, what some of the angles are is you see like these big things come out that lack substance, but it still has an impact, and it gets retracted, and then something smaller happens, but the whole idea is to gain cachet and momentum, like to gain, I think, political influence. But it's a tightrope, right? Like if you keep doing that, maybe for the broader population they might not see that, but decision makers do, and if it happens too much, it's a little bit of a dangerous game. Politics,
for sure. Yeah,
figure.
Oh, it's crazy. And then I guess we think of the last two cases that are probably notable that everyone should be watching. The first is, XRP. Mm-hmm. I think we're due a ruling from Judge Torres in the Manhattan District Court any day now, really. I'm surprised it's taken so long. But if that comes through positive, then fucking, max long. Like go nuts, boys and girls.
Not financial advice, not legal advice.
Not financial advice, not legal advice. For educational purposes only. While you're paper trading and just looking at the prices, say to yourself, "Oh, that would have been a good entry level."
Yeah.
Because that will have been a good entry level.
But keep your
that's my
feelers around for the DOJ.
Case. Yeah.
So one thing I also noticed, if we're talking about like bull and bear cases, but is the losses on short sellers in the not necessarily in crypto, but into the broader traditional markets is something like 120 billion in the equity markets. The overall short selling market right now is at something like $1 trillion, which is the largest it's ever been since I want to say like April of 2022. So obviously there are, there's still possibilities of a hard landing. There's a lot of expectations for a recession. We're just thinking, obviously, a lot of bull cases. Some things that might temper some of that maybe is like, I mean, there's a lot of smart people out there in the markets that are shorting. Obviously, they're suffering extremely right now, but there's some signaling going on too that maybe like there might be a little bit of a retracement at some point over the next 6 to 9 months.
There is. Matt and I were actually just talking about this the other day. There's always a 5% sell-off that you didn't expect in crypto. Something will hit. Like, it very well could be next week we have this episode of like, oh, this god-awful thing happened. I can't believe no one ever thought of it before. So, yeah, like that's just crypto. There's going to be something. We could have a number of different things happen. But I think, like, let's actually go through, like, what are the actual like bear cases that we can sort of like foresee now, right? I didn't put this in the show notes, but I think probably the biggest bear cases that I can think of are if it comes out that Binance or Tether don't have the assets, we're all fucked. At least in the short run, right? That is something that I would watch. I would watch like a hawk, basically the balances on Binance as well as basically the tether peg. But I think that's pretty low delta at this point. Like if we've been through multiple rounds of FUD with Binance, and if we haven't taken them down yet, then I don't think we're going to take them down. I think they last at least another cycle. But that is, I think, probably the biggest bear case in the market at the moment. We also have fun things like the DOJ. They've got a good number of Bitcoin that they need to sell. So that, is a pretty big, we've seen the price sell off by, 5% in very short time periods with them, basically market selling on Coinbase. So I'd say if you're looking for that, probably the biggest indicator is, look at the addresses of the DOJ wallets and track those pretty closely. And then probably more useful is just know that they're going to do it on Coinbase. And so if you have the ability or the data to track the flow of funds on Coinbase, just look for whatever the gross sells are on Coinbase and Bitcoin. It tends to be a pretty telling figure as to when the market's going to puke off by like 5%.
Yeah, and on the macro side, like Rob, you're saying, short sellers, like there is some, like you can see why the people are getting a bit itchy about it, especially if the Fed are going to keep hiking. And like next week, we've got GDP where the forecast is like just over 1%. I think it's like half from previous quarter. So that's pretty dire outlook already. 1% GDP growth quarter isn't that great. And then core PCE will be next Friday as well. I said this in the last pod. Based on where the Fed want that to be at the end of the year, they pretty much have to see it come down by 0.1 every single print. And if it doesn't, I think they're going to have to hike. We haven't seen it move all year, or this year at least. So, I think that's going to be the big number next week. So between GDP and that, you could see some more shocks or even some more short selling in the market after that. But I meant
Yeah,
more
I think we
for
talked about
trad markets. Crypto, yeah, it will have an impact, but then it depends if Fidelity then also release their ETF plans, so they may count.
that one's a tough one though, because you really have. I saw some data that basically plotted the price of Ethereum with stocks and the M2 money supply, and it just like tracks it identically. And based on where stocks are right now, Ethereum should be trading in like the high 2000s, low 3000s. But it's really sort of like brought down by this like SEC regulatory overhang.
Well, and I guess FTX as well, because the market carried on rallying and we recovered, but nowhere near to where it has been.
So the main question that you really kind of have at the moment is just, what's the bigger piece of news for the crypto market?
Yeah.
Right. Like if we get positive structural news in the crypto market in the way of like, regulatory clarity, ETF, microstructure stuff, is that enough to offset what is probably in my mind is the likely macro picture where the Fed keeps rates higher for longer? Because as we discussed last time, they're really shit in the long run, but in the short term, like over the next 6 months, they're actually pretty good. And they've told us that they're going to hike twice. So I would kind of take that at face value unless something terribly breaks. So that could also be the case too.
That's a good way of framing it, though. You look at the deep fundamentals, like that could really be a big boom, and that's probably what's causing the gap right now between traditional and crypto markets. Some like the lack of regulatory clarity, market structure. So that could close the gap. But still, if it closes the gap and you still have like a protracted recession or something like that, some tail event it'll kill everything, right? So,
but I think that's definitely like a 4, 5, 6 months out kind of thing. We're generally talking week to week on the show, but obviously some of these reg things are going to be, in a similar period. So it will certainly be interesting. Like I said, you might get a great court ruling, and then we actually have a second print where we're negative GDP, and people are actually really worried about a recession. And again, there is no true utility for crypto, so it's not like you use it for cash. If you're a person with invest savings in crypto and the rest of the market's crashing around you, your best option is to kind of take it out, especially if you're meant to have a job next week. So just say it.
Yeah. So I think if we were to sort of summarize here, and I guess the other big thing that everyone's kind of going on in this foregone conclusion that the SEC is going to approve all this, sudden, rash increase in ETFs, and that they're going to win these cases. Assuming that the SEC will lose these cases against Coinbase and Binance and Ripple and Grayscale, but I mean, we don't know. And there is the probability that we're going to get news that, suddenly XRP is a security, or suddenly, BlackRock actually gets, I think as early as 45 days from the filing, we could get color from the SEC that basically says, nope.
Yeah. So we could get a string of no's one after another for these ETF filings, which could be,
and that would all I think be quite bearish for the market. So, I mean, I think the key here is that we're sitting on a lot of uncertainty. And if you think of like some probabilistic meter between like, long to the tits, like let's just be super bullish, and oh shit, the sky is falling, let's be bearish. The market's probably pricing in somewhere around here right now. So as with anything, I always think as a trader, you really, really, really need to watch for asymmetric risk, right? So if your reward for the market being right now is that, great, like we're 90% priced in our bull case, but like if something bad happens, you could lose like 50%, then, protect your downside.
Yeah, manage your stop losses, yeah.
So I think that's the key here is like, I personally am quite bullish, but at the same time, I think the other aspect of it is monitor all of the dates and all of the events that you think could unwind this bullish case. And I think we've given a pretty hearty list of what those are. And the good news is that a lot of those come with, actually deadlines in court, or like operational sort of like dates in which we know certain things need to get done. One of the things that we've actually done at DeepQ is launch a Substack, and we'll post a link to that in the show notes. Our goal is not to become professional newsletter writers or to, at no point in time will we ever charge a subscription for anything. So note that that's not the case. It's just a way for us to organize our thoughts and put stuff down. Excuse me. But we will be offering basically a summary of all of these events and dates and some color for anyone that's interested in following along.
That's interesting. So would you say, so in summarizing what you mentioned, just the overall risk profile, it sounded like there's been a lot of positive news and things have been ratcheting up. But we feel like the market that we're generally like mostly pricing in a lot of the positive outcomes over the short term, but over the long term, it's not being fully priced in. Because I know you mentioned before that we should be seeing maybe Ethereum compared to traditional equity markets around like $2,000, $3,000.
Yeah, I think, like I said, in the short run, and I'm thinking more if you're covering your risk at this moment in time, know that I think the market's quite bullish. I think over the next, several months, there's a very good probability that we see a compounding of this good news as it solidifies, and that might take us to, the official beginning of some sort of bull run, whatever your metric of choice is to say that begins. But in the near term, just note that because everyone's super excited about the likelihood that something gets done doesn't mean that it actually will. And you've just got to monitor your downside risk.
Yep. Cool. I'm going to stop asking you questions, Carlos, because obviously I'm giving you a cough. So I'm going to stop badgering you.
He needs more a Patriot water. That's what it is.
I did run out, and quite frankly, I'm pretty sad about that. So it is my wedding anniversary. So I've got a bottle of bubbly downstairs that I'm going to switch to after this.
Congrats, man!
But congrats, man!
Thank you.
Enjoy a fantastic time with your wife, buddy. Congratulations. That's wonderful.
Yeah.
Right, cheers, guys.
Looking forward to it. All right.
Good night, everyone. See ya. Bye.
Peace out, boys. Bye.